Okay, we're here on RealAgriculture.com with Jon Driedger from FarmLink Marketing Solutions. Good afternoon, John.
Thanks, Sean.
Okay, John, in the last couple of days here, Western Canada has had some rainfall. What kind of impact do you think that's going to have on some of the pricing decisions or pricing outcomes come this harvest?
Well, I think what we've seen here over the last few weeks is, first and foremost, a lot of producers here in Western Canada have been maybe more concerned about seeing if they have a crop rather than making specific pricing and marketing decisions. And so my understanding is a lot of the rain has maybe been a little spotty. Some places didn't get much, others got certainly some helpful rain. A lot of places it was maybe only enough to maybe buy some time. And so certainly for those producers in Western Saskatchewan, those parts of Alberta, you know, I think for a lot of them from a marketing standpoint, I think first and foremost they're going to be a little more concerned about whether they actually have a crop to market and what it's going to look like. So here in Manitoba, of course, from about central Manitoba and east, everybody got off to a pretty late start there, and so certainly conditions have improved here substantially over the last week to 10 days. But even there, I think everyone's going to be a little bit cautious here until this crop improves and it's in a little bit better shape, and they're a little more comfortable that they actually have a crop that they can be a little more comfortable selling.
There was a lot of speculation, or I guess a lot of talk this spring about canola acres. Mm-hmm. You know, I'm not sure if any final data has come out where that's washed out, but I guess, you know, this rain is going to have an impact there. What are we kind of seeing in terms of canola pricing in the short and maybe the midterm? Mm-hmm.
Yeah, and actually we'll get a little bit more clarity on canola acres tomorrow morning when we have Statistics Canada coming out with a more recent report. Now what that report won't account for is maybe some of the changes that some of the acres that might have swung here in the last few weeks, for example, due to weather conditions, but it'll maybe help clarify a little bit where those acres will come in at. But you know, in terms of pricing, certainly I think the market has been watching these crop conditions in Western Canada, and so those dry parts deteriorate. As we saw a lot of these markets pull back here and correct through the tail end of last week, canola held up relatively well. I think some of there was maybe a little catching up to do on the downside here with the canola as we pulled off here today, and part of it is probably a reflection of the fact that we did get some rains in those critical areas. But it's a market that looks very tight going forward. And certainly if conditions remain relatively poor and the crop suffers here a bit and the overall yield looks like it's going to be down, you know, I think the market's going to be very sensitive to that. It's a tight market that doesn't have a lot of room in terms of yield adversity.
What about feed barley? We've been seeing the cash price in the Lethbridge area to Feedlot Alley. The price has been kind of stepping up over the last 3 weeks. And what can we expect in terms of feed barley?
You know, we're relatively friendly feed barley going forward. I think for a couple of reasons. Certainly, first of all, the fact that crop conditions in a good part of the barley growing country have been fairly poor. You know, that crop has certainly been shrinking from what people maybe would have been guessing here a couple months ago, and so that should be supportive of prices. In terms of bigger picture, we're fairly friendly to the corn market, and so of course that certainly would spill over and help support feed barley values as well. Maybe the one big question mark is certainly economics have suffered in the livestock industry, and I'm not sure exactly when that's going to turn around. So ultimately that'll have an impact of potentially maybe weighing on prices a little bit, but at the same time, as pastures deteriorate, animals move into feedlots maybe sooner than they otherwise would have. You know, that maybe helps add to some consumption as well. So I would say we're reasonably positive for feed barley prices going forward. We've certainly seen the market move here for spot prices the last little while. You know, should see some upside, but certainly maybe there's a certain point where feed buyers maybe are going to be a little cautious, especially until their economics start to turn around a little bit.
Do you see us going back to where we were last July, the 260, 265, or we won't, or are we going to even come close to those extremes?
You know, I would say that's pretty unlikely at this stage of the game. You know, one of the things we saw last summer is, certainly there were some pretty good fundamentals built into a lot of those markets at the time, since crop conditions both in the U.S. and in Canada looked a lot worse than they ultimately ended up being at the end of the year. But I think one thing we also have to remember is at this time last year that there was a lot of this is sort of course before we saw the full effects of this whole economic slowdown. There was a lot of speculative buildup in all commodity markets, not just the grain markets, and most of that has deflated. So while there was certainly some fundamental justification for maybe where those markets were, there was, I think, maybe some additional speculative froth in those markets that we'd be unlikely to see. So I think we'd have to see a pretty substantial deterioration in crop conditions in the U.S. and Canada to get to those kinds of lofty levels.
There was a lot of talk this spring, Manitoba, also the U.S. as far as soybeans versus corn. What does the soybean outlook kind of look like?
Well, we're quite friendly. The soybean outlook at this point, certainly much more so than we were maybe a few months ago. A lot's really changed in the oilseed market in the last couple of months. We've had a huge reduction in the South American crop, particularly Argentina, from what people were thinking earlier this winter. At the same time, we've just had a tremendous amount of demand out of China, more so than anyone is expecting, and so that's really tightened up the old crop S&D, which has helped carry over in a new crop in terms of soybeans. We also didn't see as big an increase in soybean acres as the market maybe had been anticipating a couple months ago, and so it's a pretty tight market going forward here, and the market's going to be really sensitive to yields in the U.S. Of course, that spills over into canola as well. We have a fairly tight canola S&D, and so canola is some reasons to be quite positive in its own right, but also as a result of a pretty positive oilseed complex in general. I think that market's going to be very sensitive to any potential yield adversity here going forward. There's not a lot of room on that S&D.
Yep. So what about things like field peas? Where are we at with that?
Field peas is one where, we have a pretty good supply here of old crop field peas carrying over into the new crop year. That's a carryout that has been shrinking quite a bit from where people were maybe thinking last fall. Demand and exports have certainly been better than people were maybe expecting as we got into fall and early winter. At the same time, there is a pretty fair-sized carryout. I think that's a market as well that will be looking a little bit towards tomorrow morning's Statscan report. The initial Statscan report, I think, caught people a little bit off guard with how many pea acres that they reported is going in. What I think the report maybe didn't capture is that certainly new crop lentil prices and some other crops really increased after that survey was taken, but before seeding. And so what we probably will see is maybe a reduction in pea acres, maybe an increase in some of the other pulse crops, and so that should be fairly positive maybe going forward here with the peas. The supplies will be pretty good for peas initially, but I think as we go forward, should see that carryout maybe tighten up as you go through the marketing year. And so again, later on in the marketing year, we're fairly positive that market. I think there should be some potential upside.
Okay, thanks a lot, John.
You're welcome.